Along with Bitcoin, we're going to get that deflation. We're just not going to get the easy money until the whites of the eyes of a clear global recession are in our faces, unfortunately.
Hey guys, welcome back to Library of Wealth. Today we have senior commodity strategist Mike Mcglone giving us his market outlook for the stock and crypto market, as well as what we can expect from the Fed in the next few months. Mcglone believes that the last quarter of 2022 will likely resume with a recession and pain points that mimic the crash of 1929. Mcglone also believes that Bitcoin is likely to become a risk-off asset in the near future and advises that it's imperative that people consider the reason why Bitcoin has decreased in the first place. He points out that the market has undergone one of the biggest corrections in the stock and bond market in over 40 years. As an impending global recession looms on the horizon, Bitcoin remains a strong indicator of what's going on in world markets. Let's listen to this interview with Mike Mcglone as he gives his take on Bitcoin and his prediction for the market at the end of 2022. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
So Bitcoin, I think it's a matter of time. It appreciates towards that $100,000 level, and at some point it's going to just flip in and kick into that bull market. Maybe at the same time gold and treasury bonds do in terms of price. The key thing right now, it's getting pounded, but it's one of the most discounted it's ever been on a 100-week and 200-week moving average, and it's simple facts of supply, demand, and adoption looking forward to the next 5 or 10 years. Supply is going down by code, demand and adoption are going up. Now you cannot really say that about virtually any other asset and the planet. That's also in early days of an adoption. So the world's going digital, and this is a benchmark digital asset. So to me, it's a matter of time, and let's look at relative price. I think Bitcoin's building a foundation around 19 to 20,000 like it did around 5,000 in 2018-19. It did get as low as 3, and here we are, 19,020. So that's what Bitcoin does. It only goes down after it goes up a lot. Something has to change that narrative, but the world is gaining adoption in that space. And it's also, I just came back from the WebEx conference in Las Vegas, and it's what you see is the typical, what I expect is people know this is the fastest horse in the race. It's the most advanced, it's a rapidly advancing technology. You can't fall behind, and you need to be part of it. And it's still such a small portion of global investable assets. And I'll leave with this as far as Bitcoin and Ethereum and cryptos is there's lots of speculation, but one thing that this space is doing, Ethereum, is making possible this new technology where the most rapidly trading cryptos on a planet is the dollar, tokenized dollars. People are just starting to get that. U.S. regulators are just starting to get that. And the fact that China pushed back on it is also another reason it's going to be adopted in this country. It has in Canada. It's just a matter of time.
Mcglone believes that people have seen that the Fed has become increasingly aggressive with a high pace of increased points. He learned that when you realize that the information has changed or is incorrect, you have to be willing to change your original thesis. Bitcoin is by far the best return on investment that he has ever seen in his career.
The U.S., I guess a bit of an optimist, is not dumb enough to acknowledge this is rapidly advancing technology. And as I pointed out earlier, this technology has adapted the dollar as its base foundation. Like I said, the most widely traded cryptos it's not Bitcoin, Ethereum, it's the dollar, tokenized dollar. So U.S. is getting it. It has all the key checks you need to pass in the U.S. It has money, votes, jobs, and it pushes back on China, to name a few. So it's not messy. It's a sloppy. I mean, it's not clean. It's a messy process, but it's happening. We do have a Bitcoin ETF in the U.S. It's imperfect, but it's just a process of that adoption, and it's just a matter of time. And you look at what it's doing to the world. It's somewhat unstoppable, except in places where you have authoritarian leaders and autocratic systems that can't adopt to this new technology, and that's where it's creating a great divide where places like the U.S. are moving forward. Part of that rapidly advancing nascent technology, it's like claiming Bitcoin's not a good inflation hedge, even though it's the best performing asset on the planet. It's only been around about a decade. It's early days, and I don't know how much you're going to adopt it, but it's one of those things, it's unstoppable. I mean, China's tried to stop it, and what happens, most Asians want access to the dollar, and they get it through their phones, through Ethereum tokens or other tokens. So Bitcoin's just part of that space. So I look at the technology, and that's part of the reason. I'm not bearish gold, but you got to have Bitcoin in that space with gold because it is becoming global digital collateral. At the moment, Bitcoin and cryptos have been pushed to the right side. It's the global macro with the Fed and central banks pounding the hardest they've ever done in many cases, while the world's heading towards a global recession, a significant recession. This is like 1929. So I fully expect that gold and bonds and Bitcoin's going to come out of this ahead, but it's that process, and at some point we're going to get to inflection. I'm not saying the Fed's going to ease, because they can't ease like they passed, but get to an inflection when they have to stop tightening because the pressure is so bad that everything's tilting lower, and the question is what stops it. And right now I don't see anything that stops it, and I think it's going to be one of those things that, Danielle's going to take 1 or 2 days. We have a sharp drop in the stock market or something, and then the Fed's out of the picture, at least for tightening. The key thing to remember is they will never ease, ever, like they have in the past, because of the lessons of inflation and too much liquidity. The key lesson is you only get dumps, major corrections, after you have massive pumps. And we had the biggest pump in history. And now that's dumping at the greatest pace in history. It's slow moving. I'm impatient. It's just going to take time. That's why I point out a year from now, I think the key narrative is going to be deflation and how do we get out of this recession. Particularly with numbers like this, it's keeping the Fed pounding hard, yet everything's tilting towards recession. So it's a 1929-like scenario. But that's what you expect in bear markets. Rip-roaring rallies, rip your face off, and bear markets take money from everybody. So I think that narrative is now mainstream. It's just a question of how much volatility there will be and what can save us. And that's my key theme for literally the last almost 3 months is I don't see what saves this ebbing tide of global risk assets, most notably where all correlations are now starting to head towards the S&P 500. You look at the charts now, even crude oil and commodities are all following the stock market lower. The peak this year is actually below that of 2008 in terms of inflation, and it's just looking at the macro bigger picture that I fully expect. When we're speaking this time next year, it's going to be about enduring inflation. The difference this time versus almost our entire lifetimes is the Fed will not ease as easily as it did in the past. That's the big difference, and I think most equity investors are getting it. That's where I think gold's going to come out ahead along with Bitcoin. We're going to get that deflation. We're just not going to get the easy money until the whites of the eyes of a clear global recession are in our faces, unfortunately. What we should expect now is inflation to decline and expectations for inflation, to actually start, inflation actually start underperforming expectations, which will be because of a global recession. But the markets, I think, initially take that as a relief because they'll say, oh, inflation's dropping, the Fed doesn't have to tighten anymore, doesn't ease, but I think inflation is going to plunge and go back to where it was well before COVID because of recession.
Mcglone believes that Bitcoin is in a process of recovery as commodities will begin to crash. He points out that many currencies worldwide have declined tremendously and that the impending global recession will be severe and ultimately cause those markets to collapse. He believes with this decline in the market, it will also cause Bitcoin to shine. Even though Mcglone holds Bitcoin in high esteem and in the lead of the coming bull run, he stresses that it's imperative that people consider holding more than one crypto in their portfolio. As markets fluctuate and the world economy changes, having a diversity in cryptocurrency allows for flexibility in considering who the next winners will be. What do you guys think about Mike Mcglone's opinion for the last quarter of 2022? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.